Welcome guys, welcome. My name is Gavin Pannu and this is your host for M Trading's webinar. Today we're covering more about candlesticks and short-term sentiment. So the key definition comes down to what is candlesticks and why do we look at candlesticks and how do they represent short-term sentiment. Yep. So this will give you a deep understanding into the market psychology between the bulls and bears, so they're known as the buyers and sellers. Learning this skill will allow a trader to read the market for that fear or greed in the market and correctly execute their trades also. So not only does it provide you that short-term sentiment, but also it gives you confirmation to be able to execute your trades with good risk-to-reward ratios. Okay, so I'll start off with what asset we're on at the moment. So we're using the MT4 platform, guys. MT4 is a great platform, and also I do have the additional benefits of the expert advisors. These expert advisors that M Trading provide, the Supreme Edition, does benefit and help me in my trades. Okay, so what I have here is a dollar-yen chart. So this is a dollar-yen chart. We'll start off with the basics, guys. So I will just change it to this. So what are we seeing at the moment, guys? If anyone wants to put it within the chat, please do. What am I seeing currently? Yes, so I am seeing a line chart. So this is a line chart, and this is based on closing prices. That's all it's giving me. It's only giving me one piece of information, and it's telling me the close with each time period. Yep. So currently I'm on the 1 hour time frame. So every close at every hour, that is where this line will be drawn at that price. The next one above this, which gives us a bit more detail, is a bar chart. Yep, so this is a bar chart, guys. So this gives us 4 pieces of information. It tells us where the market opens within that time period. Also, where does it close? But not only that, it also provides us more about the range in the market, the volatility in the market. So it gives us the high and the low, that range that we see of volatile periods in the market. Yep. So it gives us those 4 pieces of information to better understand what is truly happening with market psychology and just buyers and sellers psychology. But just viewing it like this, as we are right now, of this dollar-yen on the 1 hour time frame, is it easy to understand? Okay, the bigger picture is, okay, we are in a downtrend, but are we really understanding what's taking place in the candles? I wouldn't think so. It makes it very difficult to truly understand what is taking place. To give you an idea, let's zoom in. So if I just zoom in by a few candles, yep, so there we go. So we're looking at a little bit of information now. What we can see on the actual construction of the bar chart is the left tick. So the left tick shows us the open. The right tick shows us the close. The height of that line, so the height of that line from the high to the low is the market volatility. So from the high to that low, it shows us the market range. But as I said, the benefits are to a line chart, it gives us that 4 pieces of information which are vital to trading the markets. But the cons would be is that it's not easy to understand. It's not visually appealing. Yep. Then we move on to the final chart type, which is candles. There we go. So just by, it is the same type of formation, so it gives us the same information. So it gives us the 4 pieces of information. It gives us the open, the close, the high, and the low for that market range. Yep. But in addition to that, from the open to the close, it is a filled body rather than a line, a continuation line. So we're seeing a filled body, and that body will be in 2 different colors. they can be preset as minor. So a bearish candle is that white candle, and the bullish candle is the black candle. Yep, the black filled candle. But you can also find it with red and green, blue and red. And you can customize that to how you want to visually see your charts, your candles. But now if I zoom back to the prior formation, there we go. So just by seeing candle formation, we can easily see what's taking place within each of those candles. So not only can we see the bigger picture that we are in a downtrend, yep, so the bigger picture is, yes, we are in a downtrend, but also how much selling pressure is taking place and how much buying pressure is taking place. So you can see overall there's a lot of selling pressure here, and now we're seeing some buying pressure, but markets moving sideways. There is some buying pressure taking place there, but again, once it gets to this high, we start to see more selling pressure again. Yep. So candlesticks are truly making our life a lot easier in understanding that market psychology. We can really understand that what is taking place within traders' minds at the moment. Where are they extremely bullish or extremely bearish, or where are they indecisive about what's taking place currently within asset prices? Yep. Okay, out of those 4 pieces of information that a candle provides us, the open, close, the high and the low, what is the most relevant? What is the most important point, but the most important part of a candle formation? Does anyone want to answer that, guys? Do you want to take a guess, or if you do know, yep, it'll be good to just put it within the chat. Yes, so it is the close. It is the close of the candle which is the most important part of a candle. Yep. So the close represents whether the buying pressure has continued to stay throughout that time period, or the selling pressure has won over the buying pressure that was originally there. So the close represents the most important part of a candle. Yep. So please do remember, if anything of a candlestick, remember that the close is the most important part. Now, let's move on to the next part. So the next part will be is when do we view this? Yep, so when do we view this? Yep, but before we go on to that, I just want to go into 2 main candlestick formations, guys. Yep, there are only 2 candlesticks that you need to know about. Does anyone want to have a guess in regards to what those candles are? Yep, just put it into the chat, guys. Okay, just because I'm on MT4, it makes it a little bit difficult to actually draw within MT4. I'm just going to bring up Paint. Simple application tool that we can just give us a better understanding of what I'm talking about. Yep. So there are only 2 types of candles you really truly need to know. Once you understand the market psychology of both of these candles, then that's it. That's all you need to know. There are intermediate and advanced levels of candlesticks that you need to study, like I have. But again, I would break it down. If you're looking at just simple setups, trading day-to-day basis, building up your experience, most definitely you should be just considering 2 candlesticks as the most important part of your candlestick analysis. So let me just draw that out also. So we're looking at 1 type of candlestick such as this. Apologies for my drawing currently. It's going to be a little bit scruffy, but it will do for this webinar, guys, is this. We're seeing these are the 2 most important types of candles there are. Yep. So the one on the left, guys, the one on the left, this is known as a continuation candle. Yep. So continuation candle, both of these candles that I'm discussing with you is more about the sentiment and the psychology behind the candlestick that's taking place with traders. So it doesn't have anything in regards to whether it's bullish and bearish. Let's assume they're both bullish or they're both bearish, whatever it might be. Yep. But for that market psychology to understand what that truly means, this is what we're going to go with. So let's assume this is a bullish candle. So this is an up candle. Yeah, we're seeing this as an up candle. So let's mark out our 4 important parts to a candle. So on the left, you'll have your open, you have your close, high is always at the top, and the low is always at the bottom. So what is taking place currently? So it's as simple as this. We start off at the open. We get to the high. Sorry, let me just edit that. Okay, start again. Yeah, let's start again, guys. So we start off at the open. We move down to the low first. Yep. So we move down to the low. From this low point, we get up to the high. We get up to the high. That is so this is selling pressure. This is our buying pressure. And now from that high, we see some selling pressure taking place to where we close. Yep. So now if you put the down arrows together and then view both of them individually, so the down arrow and the up arrow, yep, what you're seeing is overall there is significantly more buying pressure than there is selling pressure. So buyers have dominated this time frame. Let's assume this is our dollar yen on a 1 hour time frame. So this is our dollar yen on a 1 hour time frame. So overall we're seeing that the buyers have full control within that time period. And as simple as that, guys. Yep. So now I'm also going to put a disclaimer within, is that we don't know if the formation went in this way. We don't know that. And I don't really need to know that, to be fair. Yep. I wouldn't need to know that, and that's the best thing about candlesticks. You can view them later on and just understand exactly what they represent. Is that I don't need to know how did this go up to the high first, then come back down to the low, and then went up back to that close. That's irrelevant for me. Whatever the tug of war that takes place within that 1 hour time frame, that's fine. Yep. For all I'm concerned for is the close. Once the close takes place, where is that close compared to where the high is, the low, and from where did it open? Yep. And all I'm seeing overall is that this is showing us it is a bullish candle, which means this is a strong continuation candle. Yep. So this candle is likely to continue. So this will be seen as a strong continuation candle. Yep. Once you know this type of candle, whatever candles you see within your charts, that's it. You know, okay, that's a continuation candle, that's a continuation candle. You can call it continuation bullish or continuation bearish. Yep. So now we move on to the next type of candle, and it's this one here. Yep. And this is seen as a, does anyone have a guess? This is seen as an indecision candle. Yep, this is either seen as indecision or potentially a candle that is paused. There is a pause in the market. Yep, so what this is representing to us, let's break it down again. Yep, again, let's assume this is an up candle. Another up candle. We have a high at the top. We have a low at the bottom there. And the left tick is the open, the right tick is the close. Yep. The color defines whether the open is above the close or the close is above the open. Remember, the color defines that within the candles. Yep. So let's go through the same process again, guys, just to have an understanding of what the market psychology is behind this candlestick. And that is, if you look at from the open, let's again, from the open, we move down to the low. And then from the low, we get up to the high. And from the high, we move down to where we close. Yep, so now if we put the two down arrows together and compare it with the up arrow, what do we have, guys? So what are we seeing now, guys? We just put it in within the chat. So what we're seeing currently is the fact that there are, and on average, depending on the candle body size, is that there is, yep, so price doesn't know where to go. Yep, so that's a great comment there, guys. So it's showing us indecision. So on average, there is almost equal selling pressure to buying pressure. Yep. So the buyers may have are slightly ahead in dominating within that time period, but the sellers are still up there with them. Yep. So we're seeing an almost balance between the two. And this is the important part, guys. This is the important part. Yeah. So going forward, guys, please do look into both types of candlesticks, the continuation and the indecision pause type of candlestick. This will represent, this will give you better trading ideas, better signals. Yep. The idea is also these candles do go into further examination when you do look at, when you have the body at the bottom, such as this, and a long wick to the top side. Now this will represent a more of a potential bearish outlook. Yep, so this could potentially be a more bearish outlook if the market has been trending higher. Whereas if we're seeing on the downtrend a candle such as this will represent more of a bullish outlook. Yep. But remember, guys, the key point is, which I'll come on to in the next point, is I can now just remove this. We can just go back to the charts and ignore my drawings for a couple of minutes. Okay, so once you now know the difference between those two major candles, there's only two types of candles you need to know. You can study further into candlesticks, but there is continuation and indecision. The next part is, how does this represent short-term sentiment? So short-term sentiment is, so candlesticks are giving us that short-term sentiment within what's happening within that time period of the war between the buyers and sellers. So the idea is that you can actually most recently look at the most recent price action and determine, okay, what is taking place at this level here now. Yep. So what I'm seeing is, okay, we are overall in a current downtrend. Yep. Now if I just place in my trend line, let's just assume that is my trend line. Yep, so that is my trend line. Remember, from the first touch to the second touch, third touch, that is a confirmed trend line. We've just had a breakout, so a breakout, but then a potential retest, yep, taking place. Guys, listen to the previous webinar, which is more about price action, reading price action. This is now going into a bit more detail onto price action. So just to bring that up again, yep, so when you're looking at price action, you're looking at that bigger picture view. But what we're trying to do now is, once we've done that bigger picture view and seen where the markets are, done our analysis within that asset, then we want to go into and see what the most short-term sentiment is, what the view is. What the view is with the short-term sentiment. So looking back at this much data, do I need to know exactly what's taking place within the candles, each one of those candles? No, just need to look at the bigger picture. Yep. So I know that overall is a downtrend. It's only when you are looking to execute a trade, you're potentially looking for that short-term sentiment within the candles. And one thing I want you to remember, guys, is 9, the number 9. Try to look at the last 9 events from where you're looking to take a trade. The idea is, look at a maximum of 9 events. I don't need to look at 20, 30, 40 events. Yep. If I'm basing my analysis around this, and I'm now looking for potentially, say, a trade, okay, so we've got our trendline break and looking at a trade break of that previous high. Yep. I do not need to look at what the candles were doing from this period onwards. There's no need. Yep. All I need to know is look at what's happening most recently. So let's zoom in. So what I'm seeing at the moment is, okay, yep, so this is our low now. So we've hit a low, and from there we've seen a bullish momentum. We've seen how this candle here was trying to push lower. You got this longer wick at the bottom there, but straight away gets rejected. So this is where it's open, guys. Open here, push down to this low. Yep, so that low, from there buyers got into the market, pushed the market higher, that broke this trend line, and there's a very little wick to the top side, so showing that the sellers from that high point were not significantly able to push the market further down. Yep. So the buyers have overpowered the sellers at this point. And then we start to see a bit of indecision. Yep, so buying pressure doesn't continue. So it's showing that the momentum to break out hasn't continued from that prior candle. Yep, so there's a balance between buyers and sellers. But then the candle after that, okay, we start to see more buying pressure. Yep, more buying pressure, but a long wick to the top side though. A long wick to the top side showing us, okay, sellers were also able to bring it down. Not as a significant retracement, but we're seeing some selling pressure taking place. And then our next candle over here, we've seen what we're looking at is more of the same. Yep, so some indecision. And the idea is, guys, you want to look at not just one indecision candle or one continuation candle. The idea is you need both. You need both to take a trade. You need some indecision at key levels, whether it's at a trend line, whether it's at a resistance level, or at a channel level, or your support level, whatever your analysis. You're looking for indecision to take place at these critical levels. And then you need a continuation candle in the direction you're expecting for confirmation. So you're looking at the last 9 events, but your decision is based on a factor of 2, 3, or 4 candles through a level. Yep. So do not forget your that prior webinar that we discussed about price action, support, resistance, high highs, high lows, and so on. The key emphasis is down to what do we do when we're at that point? How do we gauge the sentiment in that market within this time period once we're there? Yep. So that is my confirmation. So I've seen some indecision taking place. 1, 2 indecisions up at this point, and what takes place? That a strong selling pressure that takes place, because we've seen that once we did break out of this trend line, overall that momentum weakened. There wasn't enough momentum. So the sellers come back in, push the market, retest that previous low again. We have a potential retest of that previous low again. Yep. So at this point here is when we're going to follow the next candle. We'll look at the next candle. Yep. So at this point, you'll be thinking, okay, this looks like a strong sell. That could be my confirmation to take a trade short. But look what takes place in this next candle. Okay, so it gets down it opens at the bottom there. So it opens at the bottom of that candle body, moves down to this low, then gets up to the high, and then close enough to where we opened. Guys, what does that represent? Are buyers stronger? Or are sellers stronger? Yep, guys, it is an indecision. It's showing us a lot of indecision, guys. Yep. So we're seeing that even though we've seen this strong selling pressure and strong sellers getting down to this low, buyers come back in with the same amount of momentum. Being able to push the market back up to this key level. Yep. So again, this indecision is showing us, okay, again, there's a balance between the buyers and sellers. What do I need now? I need a confirmation candle. I need something to confirm that we're going to see a continuation in this move. Yep. So I'm looking for higher probability setups rather than getting setups with high risk reward but are extremely low probability. Yep. So therefore, I'm looking for that continuation candle. And at this point here, yes, you have that continuation candle. Yep, so we have a strong close, and the close is at the high. So the close is at the high, very small wick at the low. Yep, so we're seeing a very strong bullish candle there. Now, our idea was we need to break through this resistance level. This is our resistance level. So I'm going to monitor the candles up to this point, and yes, once we break through this level, that is when I take the trade. Once I get that confirmation from a continuation candle. Yep. I'm just going to answer a quick question, guys. Please. Oh, okay. So, yep. No. Remember that from my prior webinar, that the key point is I'm looking at the bigger view, looking at price action, the bigger picture, placing my key levels, which are support, resistance, trend lines, looking at channels, possibly any advanced tools that I may use. Once I've come up with my analysis, that tells me, okay, this is the area where I'm looking to buy, this is the area where I'm looking to say target, and this is the area where I'll place my stop loss. Once I've done that, that's when I'll move down to a lower time frame, go to a lower time frame, and then view the candlestick analysis through the level that I'm looking to enter for my pre-analysis from the higher time frame. So my view is, okay, to monitor price action up to this point here. Yep. So this could be, it could be 1, 2, 3, 4, 5, 6, 7, 8, 9. So yeah, so we're looking at about 9 candles. Yeah? So almost 9 candles, maybe less than that, just to manage it from there. What I'm seeing here is potentially an equal low. So equal low, which gives us a double bottom formation taking place. Equal low, a break of the previous high. We've already broken out of a down trend line which has 3 touches, and 3 touches is a good confirmation of a trend line. So break through this level with that analysis and my candlestick is significantly important, guys. Okay, so let's take a step back for now, guys. So I've given you an idea of how this, there are 2 types of candles that you need to view. Yep, so the 2 types of candles, which is continuation and indecision candles, how you need both to actually take a trade decision. Yep, and your trade decision is not based on these candlesticks, it's based on your prior analysis. Your candlesticks are only forming and informing you of that short-term sentiment to be able to take the trade with confirmation. Yep, but just to give you an idea, guys, why would I not take a trade based on just a continuation candle? If we're seeing candles such as this, we're seeing this move here, I've seen a strong continuation candle, a bearish candle taking place. Why not get in on the next candle? Why not get in on the next candle, guys? Can anyone answer that? Okay, the reason being is, this is why we come down to looking at that indecision and then a continuation for confirmation, is that it getting in when you've seen a move like this is extremely dangerous, because it will tell you that the market, a perfect answer there, which is it could be exhausted already. Yeah, so that could have been the whole move that was going to take place. So you could be the last sellers in the market. You could be the last buyers in the market. Yep, that's one point. The second point is risk to reward. Now, if I'm aiming for this as my target, so this prior low as my target, this low here, and I've entered here, and my stop loss has to be, say, above the prior candle, and that prior candle is all the way up there, what does that mean now? So now my risk is greater than my target. What other traders do, which is actually bad trading, is now, okay, I know I'm getting in here, I'll just place my stop loss halfway up the candle. And now you're fitting your risk management to your trades. The idea is, if you've seen something like this take place, and you didn't take the trade, say, on the break of this prior low, so if you'd taken the trade on the break of this prior low, that would have been a sufficient good risk reward there. So break below this, if I just give an example, so what am I looking to do? Put a horizontal line here, and let's put in some, so if I'm looking to now enter at this point with a potential target of this previous low around this range here. Yep, and a stop loss, let's just place a stop loss above this high. That is good risk reward, right? That is a good risk reward trade. Whereas now, if I look to get in here at this point, let's remove this, stop loss up there, getting in, oh, if I just erase that, let me just go back into that. Getting in at this point, target there, stop loss there, that is not good risk reward. So by looking for indecision in the market and waiting for that continuation to take form is going to give you a good risk reward trade. You're going to have correct technical placements for your stop loss. Yep. And you're getting in when, say, if you're looking to buy, you're getting in at a bargain price when it's low. When you're looking to sell, you're getting in at the high price so you can sell. So those are the key points there. Yep. Just to give you an example is, let's go through this market, and another key point to mention is try to look at peaks and troughs. You can find indecision candles midway, so as we've seen here, look, just if I just zoom in, and that is the other benefit of looking for indecision and then continuation of that reversal or the breakthrough a level. Yep, is that you could see at this point over here that you've seen some indecision. Now, if I've taken this trade thinking that, okay, this is an indecision, now this is likely to go up to the top side, what does it go and do? If I don't have confirmation, it goes lower, hits my stop loss, and I'm out. Yep, so you need both. Even taking indecision on its own is not good enough. Yep, but again, so what we're looking for is the peaks and troughs. So you can see this is an up move, a small candle, small bullish candle, indecision, next candle, breaks lower, closes there. You could have entered at this point. You could have entered this candle above that prior high with a bit of buffer. Again, at this low, what are we seeing here? Strong down movement. What we've seen is significant down movement there. Then some sideways, and then a bit more continuation, but you can see the bodies of the candles are weakening. And then you have that indecision taking place. Here's your confirmation of the trade. Enter on this candle, stop loss below the low. There we go, another bullish move. More indecision taking place there. Then you have your confirmation. And this is what you're looking for. When you see something like this, when you have multiple indecisions taking place back to back, back-to-back indecisions taking place, and then have that confirmation, that's showing you that it's holding that price level and it's trying to break through that price level, but it's been rejected on this time frame. It rejected 3 hours straight. It's been rejected to break any higher, and now you have that confirmation. So remember to look for these at the peaks and troughs, guys. I'll just zoom out a little. Yep, so again, just looking at the bigger picture view, have a look at this, guys. So if I just highlight this, look at that. Strong downtrend, look at that. At the trough there, 2 significant indecision candles, bullish candle, next candle, doesn't matter. Next candle, take the trade, and that continues. Yep. Prior to that, let's have a look over there at this top here. Again, at this top there, you're seeing bullish momentum all the way through, indecision, then you have your confirmation. Yep, and that could be taken with every single trade you can see on this chart, especially when the market's trending, and even if the market is in a consolidation zone. If it's consolidating, you have this range from these highs and lows. That also will form indecision at these tops and bottoms, which you can take advantage of. Yep. So finally, that brings me on to is the types of advanced candlesticks there are. Yep. So this gives you, this basic webinar is giving you just an insight onto what you should be looking for if you're looking to take trading seriously, guys. And this is renowned and it works really well. So please do look further. Do ask Dominic and myself further questions. You can always email us to get in touch with us. If you're a little bit shy and you don't want to participate within the chat room, that's fine also. But yes, do ask more. Going into this PDF here, I have this PDF. This PDF is an awesome PDF. So it's showing me those common reversal candlestick patterns. Remember, 9 events. Yep. So ideally, you're looking at 9 events. Yep. And I've got the strongest signal to the weaker signals. Yep. The weaker signal doesn't mean that you can't take a trade based on that. You can, but there are stronger candles that give you more of a confirmation of a potential reversal. Yep. So, so we're looking at these. These are bearish. So you're seeing is uptrends, and what you're going to see at the top for that reversal. So you're looking at bearish engulfing, dark cloud cover, shooting star, which is a popular one, gravestone doji. These are some of the names given. Candlesticks they come from Japan. They've been around for centuries. They've been around for centuries by the Japanese. They used to trade it with when they used to trade rice. Yep, so when they used to trade rice, this is when they used to use candlesticks. So this is going back 300-400 years. So yeah, there are plenty of books out there in regards to candlesticks. I can also send you this as well document, this PDF document, which will give you more insight into looking at these candlesticks further. Yep. So you have it. You have bearish engulfing, which is probably potentially the strongest signal, and then you have a spinning top. Which is a weaker confirmation. For the bullish side, so what you're looking for is a downtrend, and then you see at the bottom there some bullish confirmation taking place of a candle or a series of candles up to maximum of 9 events. This is what you look for. So you've got the bullish engulfing, which is the strongest signal, and then you've got a spinning top, which is potentially weaker signal. Yep. But guys, you can watch this webinar over and over again. This webinar goes onto YouTube. It also goes onto M-Trading's website under the webinar. So yep, you can go through this tutorial again, but do please ask us questions. Apart from that, guys, that is all, guys. Are there any questions before we end the webinar, guys? Are there any questions?
I think maybe what we do is I stop the recording, and if anyone still has some questions, feel free to ask them in the chat.
Oh, okay, Dominic. Yeah, let's do that. So if we can stop the recording, and we can wait for any questions.